A very crucial technique you'll need to learn in order to succeed in day trading is how to time your entry to make your profits fast. Welcome back to another trading strategy video. I'll walk you guys through some of my recent trades and explain the strategy I use to make a little bit more than $2,000 in under 30 minutes. And I've been using this exact same setup almost every single day so far this year. So if you're a new trader and if you want to treat trading seriously, this video is made for you. I specifically want to go over two small cap, low float stocks that I traded. There's a common theme that you will soon observe in both of these trades, which is how I wait for the right timing to execute my entries. In this video, I want to share a very crucial technique with you guys if you want to succeed in trading. How to time your entry to make your profits fast and reduce stress, either during pre-market or normal trading hours. How to analyze small cap stocks with various data points as your edge. My go-to strategy for trading small cap stocks, and how I find these stocks to trade with my strategy. So if you want to learn the sniper entry trading technique, including when to enter your trades pre-market, then make sure to smash the Lamborghini like button. Okay, I'm just kidding. I'll never tell you that there is a way to get the perfect entry in every single trade, but I will teach you some realistic technical analysis techniques that you can use to improve your entry and timing. So without further ado, let's get started. The first concept that I want you to pick up today is knowing your edge as a trader. If you don't know what that means, you probably are not ready to trade a live account. Let me keep it simple for you. If you want to make trading a consistent career rather than a get-rich-quick scheme, you should start by focusing on mastering one trading strategy rather than trading 4 or 5 different kinds of setups all at once. Some of you may call this a playbook, a pattern, or a trading setup. My point is that you should know what your focus is every single morning when you wake up to look for stocks to trade. If you are a breakout long trader, then focus on mastering your ability to find the right place and the timing the breakout entries. Or if you are a reversal trader, then focus on finding the reversal patterns to trade midday. After almost 10 years of trading, I've developed an edge in shorting the small cap stocks. I have my entry criteria, and I will specifically look for these kind of stocks that fit my criteria to trade. This is the real process of what I do day to day as a trader. You should not just wake up and open your trading platform and start trading random tickers that other people are talking about. That's what we call being a sheep. And as we all should know, sheep get slaughtered. There's no edge in that. Okay, now that you understand the importance of knowing your edge and knowing which kind of strategies to focus on, the next part of the video, I'll walk you through my trading strategy, the bag holder short setup for small cap stocks. The bag holder short strategy is essentially a highly repeatable setup that I've used throughout my trading career. It's specifically designed for trading stocks that very small cap, low float, high trading volume, and high gap up percentage, either during pre-market or the regular trading hours. I named this the bag holder short because this strategy requires a clear and strong technical resistance level on the daily chart, or as many of you may call it, the supply zone. We'll go through a detailed scanning criteria for these stocks in just a little bit, but whenever you see the stock price approach a daily extreme resistance level, the bag holders who's been losing and holding on to those losing positions for days, weeks, or months, they finally get the chance to start selling their bags. Of course, that's with the hope of recovering some of their losses. This kind of selling pressure from the bag holders will likely cause the stock price to go down. Of course, that's also on top of even bigger selling pressure from insiders, debt holders, other dilution activities. These are very common scenarios we see with small cap stocks, especially those stocks with long-term downtrending daily charts like this. So now that you understand the psychology and the thesis behind this bag holder short strategy, the next crucial thing you need to learn is how to find the right stocks to trade. So here's how I scan for stocks to trade for this particular strategy. On the screen right now, you're looking at my stock scanner, Stocks, STOX. I have two different scans for this particular strategy. One is pre-market scanning, and one is during the middle of the day and even after hours now. So we'll start with the pre-market gap scan. So you can see my pre-market gap scan over here. If you see my filters, I'm scanning for stocks greater than $1.50 with volume over 200K. This is pre-market, okay? And then I want to see at least a 10% gap up. And market cap, I'm looking for stocks that's under 800 million. So essentially, I'm scanning for small cap stocks. So once you can see the results here, I can sort it by gap percentage. So we are looking at the highest percentage gappers on the day. You can see all these different results here. And I'll go through what I look for on the chart in just a second, but let me show you what I do midday. During the middle of the day, I change my scan criteria to something different here. So I have a midday scan over here for small caps. If you look at this, I'm scanning for still stocks above $1 or $1.50. Volume, midday, I'm looking for 500K. Because in the middle of the days, a lot of time you get new runners during the lunch hours. So I'm keeping my filters quite low. Percentage, I'm still looking for 10% and 800 mil market cap once again. And since right now it's after hours, I'm casting a wider net. I'm using an after hours scan. So I'm scanning for stocks that have a change percentage of more than 10%. So I'm sorting everything by change percentage here and with much lower volume criteria for after hours scanning. So we can take a look at all these different charts here. BOF. So you can see this is indeed also a bag holder chart for sure. If you zoom out on the daily chart, you can see this particular stock, it's been selling off ever since IPO around $6. $5 or $6, and since then it's sold off to just a little bit above $1. Today probably has some sort of catalyst and stock ramped up to the daily resistance areas around the 250s, 260s. Now, while I didn't trade this particular stock today, the reason it's still very useful to do the scan after hours is that you can plan for your trade the next day. So tomorrow morning, if this thing tests the same resistance, let's say 240s area, once again, 240s or even the intraday levels around the 220s over here, I will look for another short using this particular strategy. So BOF is indeed a bag holder short. MTC, let's take a look. So chart-wise, you can see this thing is actually a breakout chart. So I would be cautious shorting this one in particular, even though you do have some small resistance around the 380s area. So if you look at MTC, even though it's a pretty big float, almost 200 million, the stock is still breaking out. So that tells you that there's some sort of catalyst that's quite significant. So I would be cautious trying to short this one. This one, I would not short this. So you can see we have like a lot of these like $1 stocks. WIMI, WIMI. This is also a bag holder chart because I remember shorting this in the past before. If you zoom out, long-term bag holder chart, you can see this day's breakout, you're testing a lot of resistance around the 120, and next you're going to go to a 140s area. So this is another potential for the bag holder short setup. Let's look for something slightly more expensive, perhaps. MULN, Mullen. I know this stock, very dilutive, as you can see. Multiple reverse splits. You can see a split here. So you can see the stock had a long history of selling off on this. And also recently, you can see a lot of resistance after today's breakout. You have some resistance around the 550s. Over here again, $8, 660s. This is a long-term dilutive stock. I just remember this thing ran up during 2020, and since then it's been selling off. So lots of bag holders on this. So this is also another potential for the bag holder short. Let's look at a couple here. CZOO. This one is indeed a bag holder short again. I'm quite impressed that this thing actually held the gains today. So if you look at this stock, you're now testing the resistance around the $13 and also the $16 range. So those two areas will be areas I'll be looking to short into during the market hours, not after hours, obviously. But if you zoom out on the daily chart, again, long-term dilutive and downtrending chart. So these are the charts you want to be careful of if you are long biased. And if you're short biased, then these will be the kind of chart you want to look for as candidates to short into. So yeah, some more key metrics you want to look at on the scanner to make sure you are targeting the right kind of stocks to trade for this particular strategy. Is another really important one is insider ownership. So insider ownership essentially tells you how much of the shares available is held by people inside the company, CEOs, board of directors, etc. So you want to know that, especially if you're trading small cap stocks, because whenever we see high insider ownership on small cap stocks under 800 million, there tends to be, whenever the stocks break out, usually on one day, day 1, day 2, or day 3, you'll start to see a lot of selling pressure because small cap stocks, these insiders, they finally have a chance to sell some stock to make some money, right? If you think about it, most of the small cap stocks, they're not profitable. So the only way for them to make money, the insiders to make money, is to sell paper, which is selling their shares. Imagine if you had a stock that was only a couple dollars before, a couple days ago, for example, this one, BOF, which we saw earlier, had a high insider ownership. Over here, you can see anywhere around 50%, over 40, 50%, that's when insider ownership starts to become really, really high. Again, not always, right? We're talking about stock market after all. Nothing is guaranteed, but you can learn all these important data points to help you make the best decisions when you are picking which kind of stocks to trade, on the long side or the short side. Another metric you want to be aware of is IO, which stands for institutional ownership. Stocks with high institutional ownership, above 25-30%, they either trade in a tight range, so they don't really move that much after the initial 30 minutes of the day, or they are one directional because they can be very, very controlled by the institutions who own the stock. If they choose for the stock to not move that day, the stock is not going to move. If they choose for the stock to rally up, as in they're buying more shares, the stock is going to rally. And if they're selling more shares, you bet the stock is going to have a beeline straight down because institutions, they move the market. So those are just some small things to keep in mind when you are trading small cap stocks. Not only is the float important, market cap important, you want to make sure you have the gap and the change percentage, as well as make note of the insider ownership, as well as institutional ownership. The scanner you just saw on screen is Stocks, STOX, my proprietary scanner. I wanted a scanner that's very simple to use, web-based, so I can easily take it anywhere when I travel. And it's also available on your phone. So regardless of whether you're a day trader or a swing trader, full-time or part-time, you can easily find stocks to trade. And most importantly, I wanted to make a premium scanner with accurate market data that's affordable for everyone. That's why I spent the last 6 months working with a team of developers on stocks. We're having an opening promotion right now for up to 40% off. That's less than $42 per month. So make sure to check out the link down below or on stocks, stox.io. Now that you know how to find stocks that fits this bag holder short strategy, let's dive into the first trade example that I have for you. On this ticker, Rent, I made a relatively small amount of profit, slightly over $2,000. However, it was decent, considering the amount of time it took for me to enter and exit this trade within 30 minutes after the open. So on the screen right now, you're looking at Rent. This is the stock I traded on this particular day. You can see this giant first red day here. That's the day I shorted the stock and traded it on the downside. So let's just do some quick technical analysis, really quick, chart analysis, like what we did earlier when we were scanning for stocks to trade. Now, why did the stock catch my attention? if you look at the stock on the daily chart, you can see that prior to this huge breakout here, which I believe the catalyst was earnings, and they're trying to do something, on the back end that relates to AI. All these small cap stocks are jumping on the bandwagon, even though it's barely related to AI. So you can see stock breaks out, you're breaking through multiple daily resistance. So it's actually quite strong over here. I wouldn't short these small cap stocks on the first day with earnings news, but on the second day or the third day, that's when I start getting really interested on the short side. So you can see this thing broke through both of these resistance levels like butter. First day I did not trade the stock. Second day you can see this thing spiked. Broke through the day before's $24 highs, but it was unable to hold the gains. So that's the reason you have these long tail upper wick on the daily chart. So if you go look at the actual intraday chart, you can see this is the second day breakout here. You can see you broke through that higher day around $24 on the second day. Broke through, that's great. But then you actually slam back down below that $24 once again and close at lows. So whenever you see this kind of intraday chart where you break through the previous day's higher day, but you cannot hold the gains, there's actually a lot of selling pressure once you broke out. If we check the insider ownership, it'll be very interesting to see whether insider ownership on rent was high at all. I don't quite remember, but we can check in just a second. But that just helps with your bearish thesis that the stock eventually is going to sell off back to where they came from. So anyways, that's the reason I started looking at the short side on the third day. So after seeing that wick on the first day, wick on the second day, especially when you cannot hold that $24 level, that's when on the third day I got interested on the short. So if we look at the intraday chart on the third day, this is the day I shorted it. So you have 2 green days before this. So essentially, when I look at shorting these small cap stocks on the back of the short, I'm looking at most of the time looking for a sign of the first red day to confirm my entry. Meaning this is the first day after this huge breakout move that the stock is unable to hold green on the day. So that's, a lot of times that's a signal for the longs to sell the stock, as well as, the early shorts, they have already kind of blown up. So if you look at the pre-market chart on that particular day, we're already under that $24 area. But on that day, $24 is the key level I'm looking for. Even though we never got to 24, I did start in a little bit pre-market. This is one of the rare times I'll trade pre-market because your risk level, makes sense. Like pre-market, I'll start, 1/4 or 1/5 position around 22, and then I'm risking at $24, or I'm leaving some room around $24 to add. So either a test of 24 or a break of pre-market low, which is this $20 area, will trigger a confirmation. Because once you break that $20 area, you're going red on the day. Because this is also the previous day's closing price, a psychological level for a red to green or green to red move. Now, downside, this stock has a lot of downside because how far it's come. Remember, if you zoom out on the chart, you can see this thing came from at least $16, and then before that it came from $13, and then even $10 after that earnings breakout. And like I said earlier, most of the earnings runs for small cap stocks, most of the time, okay, not all the time, they give up most of the gains. So that theoretically, this thing still has more downside. But knowing that we have downside to 16 and then $14 and potentially even lower, that gives you the risk reward potential. Knowing that, okay, I'm risking 24, and once it breaks down 20, I'm risking $20 to potentially make all the way down to 16. So that gives you $4 per share to the downside if it breaks down $20. Okay, so over here on my actual execution chart, you can see my entries on the short side. You can see I started just before market open, so just a little bit pre-market, added some around $21. Now this is one of the rare cases where I'll start pre-market because Number one, there's a lot of technical analysis that's already been proven. The supply areas, the support, that's already been proven the 2 days before. That's the first thing. So I know very clearly what my risk would be if I were to enter this pre-market. And number two, this is actually quite important because this is the first day that there's such low volume for the stock. The last 2 days, I don't have the pre-market chart, but the last 2 days, they were trading really high volume on the stock. So what does that mean? If you are short buyers, you know that the interest on the stock has already dwindled down. And I remember this was a Monday. So usually when you have these runners over the weekend, the second day or third days over the weekend, people forget about them. So on this new day, this brand new start to the week, people already were looking at other stocks to trade. They forgot about RE&T. So that's another psychological reason why this backholder short works so well. Number one, you're trading stocks that people forgot about, so less buying pressure. Number two, the stock has already been so extended and already failed to break out the second day. So you have proven supply area. And number three, you have a lot of downside. Like we talked about earlier, after this thing goes, green to red, below that $20 area, you have downside to that $16. You can see this daily support 16s, 14s, and then potentially even towards that, 11s or 10s. So you have a lot of downside. So that's just one of the very important benefits of this particular strategy. Now, obviously, the caveat is that you want to be able to time your entry well, which I'm really happy I did for this one because I did not touch a stock at all on the first day and the second day. So just remember, the first day may not always be the best day to trade the stock on the short side, but the second and the third day is usually where you have your edge. As I mentioned earlier, knowing the entry timing that works for your edge in trading is crucial if you want to become profitable. I don't always trade pre-market, but when so many factors like we talked about line up, I will take the trade. On this rent trade, my entry timing was based on the thesis that the stock was going to sell off at the market open or soon after that and end this bullish momentum. Once the stock goes green to red, that confirms the price action we need, and we can slowly add into a winning position and let it ride out, slowly fading into the lows. I hope that you're starting to get the knack of it. Don't worry if you're still trying to digest the concept of entry timing, criteria scanning, and finding the right stocks to trade, because I have another trade example to walk you through. This time, I have a recorded footage of this live trade, and you'll be able to see the trading process live. Are you ready for some live trading action? Please give me a gentle tap on the like button of this video and comment more trading recaps to let me know if you enjoy these kind of live trading recording commentaries. The second trade I want to show you is a similar backholder short strategy executed on WISA. So the next stock we're looking at is WISA, I guess that's how we'll call it. So the day I traded is this day in particular. Same thing, right? You notice I'm doing the same thing again that you saw in the previous example. I'm shorting on the second or the third day. Now the first day of the run was this move. I think they just had a stock split. That's where you can see the S here. I believe that's stock split. You can see 1 for 150 split. So reverse split actually. What usually happens to reverse split stocks is that their share size, the float reduced to very low float. So maybe this is 1 or 2 million shares float, but the price of a stock increase. So the market cap is still the same, but now the stock is you can see a $6 stock. It was probably a penny stock before with a lot more higher float. But that's the reason why a lot of these stocks run is because they become a lower float after the reverse split. So you can see the day I traded this day, if you look at this, it doesn't show on the daily chart, but the pre-market high was 1150. Now, I did not trade this one pre-market, and I'll tell you why. And I wasn't even looking at trading this in particular in pre-market. It's because pre-market on this second day, this thing already broke through yesterday's higher day. So that higher day yesterday was around this $8 mark, $8.40 to be exact. it's already gapping up above yesterday's high of the day. So that's when I do not touch the stock on the short side, pre-market, on the second or the third day. Unless the stock has already proven to me that it's gapping down or it's, pre-market it's a lot lower than yesterday's resistance, then I do not short the stock. Pre-market trading for that is just too risky in my opinion. If you look on the scan, is that Wiza is still, a lower float stock, 9 million market cap. You can see the inside ownership, it's only 10%, so a lot less than rent. So that's something to keep in mind of. It's definitely a small cap stock. So looking at the intraday chart, even though I did not trade this pre-market, and in hindsight, that looked like the perfect entry, short $11 but risk $11.50 pre-market highs, I did not take it. I actually waited for the open when the stock broke down that $10 mark. That's way below $11.50. That's when I started the short. Seeing that there's a lot of selling pressure, just look at the volume at the open here. I use the 2-minute and the 5-minute chart side by side to look at the volume, look at the price action. So when the stock broke down that $10 mark and essentially underneath VWAP, as you will see on my execution over here, that's when I started adding more. So I'm adding along the trend to the downside in this case. I'm not anticipating as much like I was with rent. So we're about to dive into a live trading recording for Wiza. Just remember these key levels. Pre-market highs, 11.50s. That's also going to be the rough risk. $10 intraday and the pre-market support. Once that breaks down, that confirms the trade. And of course, the VWAP breakdown. So you can see on the screen here, Wiza is this bottom chart here. Market just opened, but I already entered, $10 short, and was covering some just to take some small profit around the 920s area. So a lot going on here. I was struggling with a little bit of updates on the settings, but you can see I was already short 1,000 shares at $10 for Wiza after the market opened. You can see at the open, the stock immediately tanked. So I was already up 50 cents on the stock, 920s. I'm trying to take some profit, covering up some. I'm also struggling to locate a little bit more shares for the stock as well. So I already realized about $600 after the couple minutes after the market open. Definitely got a little bit flustered because I was having some trouble locating more shares. So you can see on the 5-minute chart, stock is now bouncing off that VWAP. The yellow line is VWAP. So I'm looking to add back in around that $10 area, as you can see. So you can see I shorted $10 around that 500 shares at $10. So that gave me an average about $10, $9.99. Again, at this point, the stock is way below that pre-market high resistance of 11.50s. That's the ultimate risk. You can see really, really big rejection. So that was a good entry at that $10 mark. I added some more around 920s, adding into that weakness, shorting into that weakness. I think what's important to know is that each of these little bounces, the volume is a lot lower than the selling. So if you look at down here below on the 2-minute chart, your bounces, you have a lot weaker volume. On the 2-minute chart, you have a little bit over 600K volume, which is, compared to the selling volume at the very open, it's a lot weaker. So that's what, gave me the conviction to keep adding into it. Now you can see I added some more. Now I have about 1,000 shares with 955s average. I cut some once it broke through that VWAP. So you can see I trimmed another 500 shares just in case this does a crazy, nasty short squeeze reclaim, even though the price action was definitely weak for the stock. You can see I'm switching between the 2-minute and the 5-minute chart quite a bit. The 5-minute chart lets me see the bigger picture to see, whether the stock is actually forming the downtrend or trying to double bottom, etc. So it's nice to switch time frames to kind of get double confirmation, if you will. You can see on the 2-minute chart, it looks like it's trying to reclaim, right? But on the 5-minute chart, it's still weak. So that's why it's a good idea to take a look at both of these time frames. I'm trying to add back more. You can see it's now cracking $9. That's almost like, the pre-market low support is around this $9 mark. So if that flushes, you're gonna get like a big downside move for the stock. Fast forward a little bit more, after a lot of bearish consolidation below VWAP, you can see now we're finally flushing at $9 once again. Hopefully this is the real flush. I'm now still holding 1,100 shares, not a lot of shares, average 920s on the stock. At the same time, I'm also trading the exact same strategy on KAVL, CAVL. So that's the top chart over here. So yeah, this is one of those strategies where almost every day or every other day you have some candidates to trade. So this is one of my favorite strategies this year. Okay, finally you have the rug pull. You can see stock is now down to 860s. I covered some small. In hindsight, you shouldn't really have covered because there's a lot more downside to that, 750s area, but it is what it is. So now I have about 900 shares, 980 shares with 920s average, with some realized and half of it unrealized. You can see once I got into this position, I'm really not doing much. Once I have a good average, the stock is now downtrending. I'm really trying to let it run as much as I could to maximize your winners. You want to make sure you're doing the opposite when it comes to losers. The losers, you don't want to make it run, you want to cut it short. But with winners, you want to see how low, in this case, how low it goes. If you're long on the long side, obviously you want to see how high it goes. But that's a key difference between winning traders and losing traders. Losing traders, they're gonna let their losers work because they're holding that you'll come back, but they cut their winners short. So you want to make sure you're on the right side of being patient. Let your winners run, cut your losers short. Obviously, I'm not gonna keep risking that 1150s area anymore, that pre-market highs. Now I'm risking my risk to around VWAP, 940s, and if it goes to my average, I'm gonna trim some, break even. So always move your risk down if you're short and the stock is going in your direction, or always move your risk up if you're on the long side. So you can see stock is flushing down, new lows of the day, reaching that $8 mark. I think my target is around that $7.50, $7 area. If we get there, ooh, that's a huge drop. Yeah, I think this is gonna hold to the downside. You can see that huge rug pull. This happens when you don't have bids to support the stock, and the next bid is a lot lower. That's where you get somebody hit the market order to sell, and you have to hit essentially the downside level in order to find enough buyers to buy the stock. So you can see the stock is not halted. So 5 minutes later, the stock just got unhalted, 776. You can see I'm gonna try to cover some here. I covered some. I realized about $1,200. Have another $1,400 unrealized. I think I do try to let it work for the rest of the day, but eventually I got stopped out. It went to as low as $7, but I think I got stopped out during the middle of the day, around that 780s or something like that. So yeah, this is the final chart over here. As you can see, after the unhold, I covered a majority here, and the stock did drip lower, but I never covered around I guess lower day was 680s. I didn't cover because from the action, it just looked like it's possible for the stock to go all the way to red on the day. So I held on to the final, I don't know what you saw, I think a final 500 shares or something, just to let a runner work. I did set an in the money stop around $8. So if the stock sold off to $6, great, I make another $1.50 to the downside. Now if I get stopped out, then I still stop in the money, I still end up making money on the trade. And you can see the stock eventually kind of reclaimed, took out my stop, sold off, and then at the end of the day rallied into the close. So it's a good thing to have stops. At the end of the day, I made about $3,000 on the day and $2,700 or something like that, 2400 was from the stock WISA on the backholder short strategy. Again, this trade on WISA highlights the importance of knowing your entry conditions and timing well before you hit the trade. Even though you saw from the recording, I let the trade run for a few hours longer during the day, I was still able to cover and take profits quickly within the first 30 minutes of the WISA short. Knowing that I locked in some profit, it really helped me think more rationally and re-added on the downside in the money when the stock broke VWAP rejections, which then helped me make more money as the stock continued to sell off as long as it stays in a downtrend. And remember, the most important part to this backholder short, as you saw on WISA, Rent, KAVL, and so many of the other backholder shorts I've traded the last 2 weeks, the most important part is finding the right stocks to trade and waiting for the perfect entry. This backholder short selling strategy has been working extremely well in the last couple of weeks during the cycle of small cap runners. I've been trading the same setup almost every single day on all these low float small cap gappers. So make sure you study the key takeaways today and feel free to ask me any questions down below. And don't forget to check out stocks.io. It's a premium scanner I created with the most accurate market data. It's user-friendly and very compatible on PC, MacBook, or even your phone. And it's the most affordable premium scanner out there. We're now running a 40% off promotion, so make sure to check that out down below. Thank you so much for watching as always. I'm the Humble Trader, and I'll see you guys next time.